Hello everyone, this is Juan Sarmiento and today is Friday, October the 22nd. Today I'm going to do something different. I have some suggestions from one of you, my friend Monday from South Africa and New Zealand. I don't know exactly where he is this time of the year. I think he's in South Africa, but in any case it doesn't matter. He's a very good friend and he has a few suggestions, 3 suggestions, and we go through them so that it is helpful for him and for us, okay? Let's look at the current trades before we go into Monday's suggestions and see what we need to do. I'm going to organize all my trades here in alphabetical order, starting with Apple. And you can see here that I have November 19th expiration. My delta is almost neutral. Okay, you can see that by the shape of the trade here, we're at 149. That's our current price, and so we have a big upward delta here. That's why we have delta positive, because if the stock goes up, we should be making good money. On the downside, we won't necessarily lose money, provided that the volatility increases. Okay, so I would leave it alone. You can see that I already dropped my long puts to 145, and that's a way to take profits and neutralize my delta as we discussed before. Let's go to COP. COP, and you can see here that I have this November puts. These are going to expire, okay? You remember that last time I did the rollover of the call side and left the put side alone. And here the stock is still going up. So this leg of the put side is going to expire worthless. So right now we see that we have 10 long puts at 65 and 2 short puts at 60. 2 November here, 65 puts. So we could do 3 more of those, okay? And we have 5 of October puts, those are expiring today. So I'm going to simply sell more of those puts. Analyze closing, just to get started here. And switch it back to sell, and we can sell 3 so that we have 5 total November 65 puts, okay? By selling 3 of them, and you can see we're not going to get much money out of them, but we get 24 cents. Times 100 is $24. Big deal. Okay, but we do that. And you can even sell more, but that will be some other time. So now we have 5, 5, 10 total puts, but these puts will disappear at the closing today, and this will be the ending up trade at 56. Okay, take a look at the chart on ConocoPhillips. Okay, it's getting close to earnings here, and that's before the market on the 2nd of November. If you take a look at the Analyze tab, Add Simulated Trades, you see that we have November the 2nd. Yeah, we could close the position between now and next week, okay? Sometime next week. And then we will close because then earnings will come up, all right? You can take a look at the Analyze tab and you can see that these are November 19th options, but we could close that before the November 5th expiration, which is 14 days from now. Okay, so this is how you do if the stock is way up, okay, that there is no danger of you getting those puts assigned. So you can do exactly what I did, let them sit there, and then now close to expiration, just sell additional puts, and now you have 10 puts, and these are not going to be assigned now, and that's the way you do it. Okay, let's go to CRM. And CRM, as you can see, is October 29th, so that's a week from now, 7 days to go. You can do the rollover today, let's see where we are. All right, so it is up here to 90. It's still below the smiley face. Let's see what the entire trade looks like. Go to the monitor tab, account statement, and here we say CRM, go back, well, I have 365 days, and show the trade history. Should be showing here. There it is. Okay, so as you can see, this is the original trade. There was no rollovers yet. So when I say analyze trade, hide the position, and we see that we have a $144 loss. You know, to be honest, that doesn't bother me. Okay, if it was $2,000, I say, what's the point in keeping or cut my losses now? But 144, okay, it's not perfect, but this stock could still move strongly higher or strongly lower. And we are here at the edge of a smiley face. Even a little increase in volatility, like 2%, would turn that into a profitable trade, as you can see. So I'm willing to leave it there. By my rules, I would say, okay, are you going to roll this over even though it's a loser? Don't turn into a bigger loser. Close the position. Take your little tiny loss, which is $151 as of right now. Well, what I'm going to do is I'm going to roll over the call side and leave the put side exactly like we did before for that COP. Okay, next week we could sell additional puts, and that's it. Okay, so let's go to October. So what I'm going to do is roll the call side only. The put side, when we get closer to expiration, I simply add puts at a later date. Okay, so analyze rolling. And we're going to say, okay, November 22nd, November 29th, let's see, November 26th, okay? And next week, we just simply, we're going to do this like this. We would add November 26 puts for sale. And we just need to sell one. Okay. Right now it's $2, but I don't want to sell it before next week. Okay. We only do this put side close to the end because this put here, the October, still has a week to go. So let's just do this one here, the rollover. So I'm going to do the call sides. Hopefully it will get filled shortly. Let's move on to LOW, lows. And here we are way up here, but you see the put side again? Aha, so we're going to do exactly the same thing, which is sell two puts. Sell the put side with the November 26th expiration, which is the expiration of the calls. You would recall that last week we did a rollover only of the call side. Exactly what I did with the CRM just now, okay? Which is rollover only the call side, the put side we do on the expiration day. So let's do that. Sell two puts with a November 22nd, 26 expirations, and we end up with two November 26, and now in this case we're getting 81 cents, and this is what it looks like, the resulting trade. And you can see it's still going to roll up the call. How about that? We're going to do that, but first let's do this selling of the put right now, because we have a put here. The October 22nd 200 put is about to expire. Okay, there it is. Okay, but now we see that we have our deltas are kind of high. I want to take profit on the upside. How many long calls we have? Well, we have here 3, and we have 1 here at a higher strike price. How many short calls do I have? I have 2. So one of these calls, we have one outstanding call here at 200, and this outstanding call at 220. So let's roll up one of these calls. And by the way, look, the stock is trading at 230, so it's already gone 10 points higher. Look at the chart, by the way. Look how strong lows look right now. Okay, so let's analyze that and say analyze rolling. Analyze rolling. And just one of them. We are going to sell this January 200 call. And we're going to buy the January 220 call. And that gives us a little credit. We could do that, or we could simply just sell one. How about that? Okay, let's see if we sold one. Give me just a minute and I'll show that to you. Okay. All right, 300, and that will be $3,220 profit. Okay, let's select everything, deselect that. Okay, so what if I just sold one call? I have 3 calls, as you can see here. So that means 1 is outstanding, and then we have an additional here at a higher strike price, which is also outstanding. So I have 2 outstanding calls. If I were to close this one at 220, do I turn it into negative? No, it neutralizes the position. And to be honest with you, with this stock just going up through the roof, neutralization is exactly what I want to do. So let's do that. Let's just sell one of these calls. You can also do a rollover like that, but it seems to me that it still doesn't change my deltas too much. And we get twice as much profit, or we get more credit this way, more money back, so to speak. So let's do that. There, and as you can see, my deltas are still positive, and not too strongly so, just slightly positive. That looks great. I want to keep it that way. Okay, that looks great. Mostly because it's delta neutral in a stock that has been going up so hard, so fast for so long, that it seems like it's a good time for it to come down. And next week, this at the end of the day, this October here, puts will disappear, and my deltas, and this is what the trade will look like, opening my trade to the possibility of making a profit if the stock collapsed. Okay, let's move on to Oracle. Oracle, that's November 22nd. It looks fine. No need to change anything. It's very close to profitable. Yeah, I'm going to leave like that. As you can see, the next options expire November 22nd, November the 12th. Let's go to Wells Fargo. Oh, look at that. We've made good money. This is a trade I entered last week, if I recall correctly. Yes, we entered that last week. All right, and it's profitable. Let's take a look at the chart. We obviously entered it when it was going up strongly, and it kept on going. That is a way of showing that if the stock does go up strongly, you do make money with a Gini trade. Okay, let's take a look at the trades suggested by Monday. We have plenty of capital here, 55, option buying power. Let's go to the trade here. Costco, do I have a Costco? No. Okay, let's take a look at Costco. According to the notes here, they beat by a wide margin. Let's take a look. Let's confirm that he's correct. Okay. Yeah, the stock reported earnings way back here. adjust this. There you go. I want to display my spreadsheet. There we go. All right. So you can see that the earnings was 270. Wait a minute. That's not the right earnings. Obviously, we need to confirm that for Costco. For some reason. Normally when I put my that should be the arrow, I think. Something is not working quite correctly here on my platform. Oh, here it is. Okay, so no, it wasn't an earnings beat by too much, but 3.55 versus 3.76. So 55 or 3.76. Okay, that's 5.9. Not that exciting. Volatility. This, let me copy the trade. It might be that this is my own trade at some point in the past. Copy. We put it here. Things are changed here on the platform. Oh, here. There it is. No, obviously this is an old trade, so let's move on. I think he meant something else. So let's take a look at the other trades. HCA. December, August, November. Okay, that may be the one, but I think I have the MS trade. No, I don't. Let's check it out. MS 1.98 versus 1.7. Yeah, that's better. No, this is as ABT. I'm gonna stop here. Okay. I had to verify the email by Monday, and well, what he's suggesting is the Abbott trade, not other. The others are obviously there for my spreadsheet. So this is the one that he's suggesting. So let's examine that. Okay, let's copy that trade. And come over here, paste it, and then analyze. This is the trade he's suggesting. You can see that the volatility is really low. Okay? In 2018, that's usually too low, but let's take a look at the chart. It is at the bottom of the field, of the range for the year. But look, this is a stock that hardly ever goes higher. Well, it's gone to 40% in the past, but not a whole lot more than that. So you have to be careful with this. These are liquid stocks, this kind of big pharma, but they are not very volatile. As you can see, the volatility is relatively low, except for a few peaks. But this is for the year. It's been relatively low, but right now it's next to zero. Okay, so if you go to the monitor tab, account position, trade tab, and you can see here, go to the today's option trading, and it says 0%. So the volatility is next to nothing. Okay, so chances are it will go up, you might argue. Okay, all right. Then you see the option here, the difference between long and short options would be here, 2049, now it's 2079, 1942, now it's 1974, but you can see that it says trade. Then we have the liquidity is fairly low, and so that's why it says do not trade. And then here, of course, the current IV percentile is next to nothing. Okay, so let's look at what the liquidity would be if I were to enter this trade now. Create duplicate, and it says 1522 by to 1557. 1522 by 1557, and that's better. It says trade now. Okay, that's because probably he was looking at this after hours, and now during the trading hours it's a little better. I'm not too excited about it because I know that this is not the kind of stock that will break through the roof. But then again, look at what happened with Lowe's. Lowe's is a retailer, and look at it. But Abbott is a pharma, and they're usually not that volatile. And that's why the volatility is low. Okay? All right. We would trade it simply because all my conditions are correct. Okay? Then how many do I make? Well, it needs to be 8,600. So I say create duplicate, confirm and send, multiple, so that I can select in the amount, multiple accounts. There it goes. And my trading account is the 15, one of them, 2, 3, 4, 5, 6, too many, 5 is fine, let's send that off. Okay, if nothing, it will be a good test case. It's my gut feel versus my rules, you can say. Okay, so remember, when you have a AB, some pharma or some, even Wells Fargo, it's not the kind of stock that you think volatility would spike, but these things happen, and the volatility was low and continues to be low, and still we're making money. So that's all that matters. So we'll see. It may work. All right. Now, another stock that I was interested in is Netflix. And they reported earnings, and bang, stock jumped higher. You can see that they beat expectation by a wide margin. The volatility is historically low. So let's do that. Let's do the trade here. And December, no, we can do January. The expiration date is 6/60. That's probably going to be too high for my custom. It's going to probably be too high for our account. Yeah, this is $11,570 it's going to cost us. And yeah, November, January. So no, I'm not going to be able to do Netflix. Feel free to do it if you have a big enough account. HCA. Yeah, this stock came down quite a bit after earnings, but I think, yeah, volatility is still high, so I'm going to have to pass on that one too. Okay, well, that's all for today, I guess. Thank you very much for joining me and see you next time. Bye-bye.